What if the best debt consolidation loan on the market deliberately won't let you touch the money? That could be a genuine relief or a deep point of frustration. Happy Money does something 95% of lenders don't, and it either makes them the perfect fit for you or completely wrong for you. In this complete Happy Money personal loan review, we'll tell you what makes them radically different from almost every other lender on the market and the frustrating drawbacks that you need to know before you apply. Let's break it down. First things first, Happy Money isn't actually a direct lender. They are an online lending platform that acts as a matchmaker. They connect applicants with their partners, one bank and 10 credit unions. Because credit unions generally operate under stricter interest rate caps and more conservative underwriting, Happy Money can often secure lower average APRs for folks who don't have perfect credit. Let's start out with the basics for their personal loans. Happy Money lends between $5,000 and $50,000. You can select loan terms from 2 to 5 years. While applications don't take long, getting the money into your account is slower than average. It can take anywhere from 3 to 9 business days. Their APRs range from a low of 7.95% all the way up to 35.99%. That's a pretty standard range for mainstream lenders. Interestingly, they have just recently raised their top rate. It used to be 29.99%. What rate they offer you will depend on your particular credit situation, the amount you need, and the term length of the loan. Longer term lengths will have higher interest rates. And remember, usually only the top 10% of their applicants will qualify for their lowest rate. Happy Money will consider applicants with credit scores as low as 620. But they prioritize applicants with credit scores of 640 and above. Before you apply, they encourage you to ensure that you have no recent late payments or accounts in default. If you are applying for a general personal loan, a low debt-to-income ratio will be needed. If you are looking to get a debt consolidation loan, they will accept a higher DTI. What makes Happy Money genuinely unique is what I call the feature of forced discipline. In this way, they deviate from 95% of the personal loan industry. If you take out one of their payoff loans to consolidate debt, they enforce a strict no cashback policy. With lenders like Upgrade or SoFi, if you have $12,000 in debt, you can take out a $15,000 loan, use the bulk of it to clear the cards, and pocket the leftover $3,000 for whatever you want. Happy Money doesn't allow that. The total amount you are approved for must map directly to your verified credit card balances. This doesn't mean that you can't get a Happy Money loan for something other than debt consolidation, but if you are consolidating, they have restrictions. Another aspect of this forced discipline is that they will directly pay off your other debts for you. Through their system, they automatically identify your active cards and retrieve live balances. With your permission, they route the funds directly to your creditors. They are connected to over 15,000 financial institutions. It completely eliminates the human temptation to take a lump sum of cash and accidentally spend it elsewhere. Aside from forcing you to be disciplined, Happy Money has some other solid positives. They have a strict no other fees policy. Beside their origination fee, there are no application fees, no annual fees, no check processing fees, no NSF fees, and no prepayment penalties. Once you accept the loan, you know there are no other fees lurking behind the corner. Happy Money offers structured hardship programs, like skip a payment if you hit a financial rough patch. Also, every loan automatically includes payment protection insurance through TrueStage at no extra cost. If you suffer involuntary unemployment or a disabling illness, it will cover up to 3 months of loan payments. There's little information about this program outside of their initial announcement a few years ago. If you have experience with it, leave a comment below and tell us about it. Life happens. Happy Money seems to understand that. We all hope we don't get hit by the unexpected, but if we do, it's nice to know your lender will work with you. There are some aspects of Happy Money that aren't significant negatives, but you do need to be aware of them. Happy Money charges an origination fee between 1.5% and 5.5%. This fee is deducted upfront from your loan proceeds when it's issued. So if you get approved for a $10,000 loan to pay off a $10,000 credit card, but they charge you a 5% origination fee, you only net $9,500. Now you're still short $500 to fully wipe out the debt. If you want to make extra payments to pay the loan off early, their payment application structure can be a bit finicky. Extra payments do not reduce your principal payment until your current and already scheduled monthly payments are completely satisfied first. While Happy Money does offer online account management, paying the loan off early will require a call with customer service. They will need to give you an updated payoff amount. Because interest accrues daily, they may need to give you a quoted payoff amount to ensure the payoff amount is the final payoff amount. If you fall into one or more of these categories, Happy Money might be a great fit for you. Happy Money is ideal for people with credit scores between 640 and 680. You need more than $5,000, but less than $50,000. If you are carrying credit card balances that charge interest rates above 24%, you should try and lower your interest payments. Happy Money offers a consolidation solution focused on your success in getting out of debt. Happy Money often delivers some of the lowest average APRs in the industry for people seeking debt consolidation loans. A good APR for people with fair credit would be 18%. It is often worthwhile consolidating debt if you can get a personal loan that is at least 2 to 3 percentage points lower than the interest rate you're currently paying on your debts. So getting a loan that is 10 percentage points lower or more would save you a lot of money on interest, lower your monthly payment, and get you out of debt faster. Happy Money might not be your best option if you fit into one of these categories. You have an excellent credit score, something above 740. That means that you should be able to find a traditional lender with a low APR and no origination fee. If you need only a little bit of money, Happy Money will not be your best option. Remember, they won't lend less than $5,000. Don't take out a loan just to meet a lender's minimum. Happy Money focuses on consolidation. If you need the money for another purpose, there is likely a lender that would be a better fit. And finally, if you have a credit score below 640, Happy Money probably won't help you. Now, don't get me wrong, if Happy Money will approve you, you're likely to get a competitive offer. But shop around because they may not approve you. Whether Happy Money would meet your needs or not, you should always get 3 approved offers in hand before you accept a loan. It's really the only way you can know for sure whether you're getting the best deal that you can. Getting an interest rate that is just 5 percentage points lower on a $20,000 loan will save you over $3,000 over the life of the loan. That's worth spending a little extra time for. Some of the competitors you might want to consider include Achieve, Best Egg, or Upgrade. They will all lend to people with fair credit and have features that cater to borrowers who want to consolidate their debt. We understand that applying to several lenders can be time-consuming, but it doesn't have to be. At the Yukon project, our marketplace page is designed to save you both time and money. You can select the purpose of your loan, how much you need, and your rough credit score range. When you apply to one of our featured lenders, including Happy Money, we will automatically check your rate with up to 40 lenders behind the scenes. Our partners use a soft credit check, so applying won't hurt your credit score. We will show you all of your approved offers. That will give you confidence that you're getting the best rate you can qualify for. Happy Money's Payoff Loan is a great single-purpose financial tool. If you lack the discipline to handle a massive lump sum cash injection without spending it, their automated direct-to-creditor system is exactly the guardrail you'll need. The built-in job loss insurance and lack of hidden fees also provides a genuine safety net. But just do the math carefully. Ensure that the upfront origination fee doesn't leave you short on the money that you actually need to clear your cards. And be prepared to wait up to a week to get the money in your account. You could do a lot worse, but you should always check to see if you could do better. If you found this information helpful, please leave a comment about what you found most valuable and what information really wasn't necessary. Your insights help make these reviews better, and we appreciate it. Thanks for watching.